Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 29th of April 2024. And last week we saw gold and silver prices fall. And we may very well see the same thing this coming week. Why do we say that? Let's take a look. Now first, just a quick reminder that we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link to this channel in the description box below and ask you kindly to subscribe. Now we're getting back to precious metal prices. Gold fell $53 last week, falling from $2,391 to $2,338. Having been as high as $2,396, not quite touching 2.4, and as low as 2,292, a fall of 2.2%. In our last update, we predicted gold would trade normally between 23.40 and 24.60, with 2300 to 24.75 as outliers. With the exception of a few cents to the downside, we provided an accurate forecast. Gold spread between high and low was $104. In sterling terms, gold finished the week down £60 at £1,875. And in euros, it closed down €56 at €2,190. Silver fell $1.48, falling from $28.69 to $27.21, having hit a high of $28.70 and a low of $26.70, a fall of 5%. Last weekend, we forecast that silver would move between 27.50 and 30, with a bottom no lower than 26.50. Again, pretty accurate, though our upper limit was a little on the high side as it turned out. The difference between its high and low was $2. In sterling terms, silver was down £1.40 at £21.85, and in euros it was down €1.49 at 25.52 euros. The gold to silver ratio rose from 83.4 to 1 to 85.9 to 1. Seems very comfortable in the 80s range. Bitcoin currently stands just a little above $63,000 and is therefore down $2,000 on the week. Equities were broadly higher. Dow Jones up 253 points at 38,239. The S&P 500 up 132 points at 5,099, and the Nasdaq up 645 points at 15,927. Even the good old FTSE was up 244 points and breached the 8,000 level at 8,139. Oils too were higher. Brent crude up $2.21 at 89.50, and WTI crude up 71 cents at 83.85. The discrepancy between the two of $6 seems quite high, and there will no doubt be a correction this coming week between that disparity. The dollar index stands at 105.93, that's down 0.22 points on the week, so more or less pretty much unchanged. Now last week we stated, quote, "We have to be mindful that these geopolitical tensions are propping up gold because the robust economic data coming out of the US, with the advent of inflation reducing more slowly, and thereby interest rate cuts likely to be delayed, would under normal circumstances act as a headwind and push prices lower, at least in the very short term." Well, almost from the opening, that pullback occurred well into Tuesday and then seemed to operate within a relatively tight range thereafter. The main data to observe was Friday's PCE or inflation figures, and the data showed that prices in the US jumped again in March based on the Federal Reserve's preferred PCE core index, signaling that progress on reducing inflation has stalled. The PCE index rose 0.3% last month, and economists polled by the Wall Street Journal had forecast a 0.3% gain. The more closely followed core rate that strips out food and energy also increased 0.3%. The core index is viewed as a better predictor of future inflation. Now, the inflation readings in February and January, meanwhile, were revised to show slightly bigger increases than previously reported. But the changes were small enough that the prior estimates for headline and core PCE were basically unchanged due to rounding. This means that the yearly rate of inflation climbed to 2.7% from 2.5%, and the rate of core inflation in the 12 months ended in March was unchanged at 2.8%. We did say that we expected these figures to be marginally higher, which broadly they were, although marginally. Now this has led to speculation that rather than having 3 interest rate cuts this year, 2 or even 1 are more likely. We always felt that 3 was ambitious, to say the least, and we would be surprised if there is a cut before the end of summer, especially as personal spending also remains robust at 0.8% for March. This coming week we have April consumer confidence figures being announced on Tuesday, the ADP employment report on Wednesday, the FOMC decision on interest rates, note this, also on Wednesday. Expect no change in the rate, but perhaps more hawkish guidelines and forecasts. March factory orders on Thursday and April's employment or non-farm payroll report being announced on Friday should more or less confirm the Fed's decision on Wednesday. Useful data, but it's all going to be taken into account by the Fed, and this is where we are focusing our attention. Now, this past week, gold prices experienced a downturn as geopolitical tensions in the Middle East began to de-escalate, leading to decreased demand for the safe haven asset. We did say gold was experiencing a safe haven demand premium based on geopolitical tensions. This trend was further influenced by recent US economic data releases, which are shaping the Federal Reserve's monetary policy approach, and the recent data suggests it's likely to be more hawkish as the battle against inflation seems to have stalled. An interesting comment from FX Empire, which is difficult to argue with. We'll quote a little here. US Treasury yields rose, indicating a renewed interest in riskier assets. This shift in investor sentiment reflects a broader market adjustment, which saw the dollar maintaining strength and European bond yields experiencing modest increases. Such conditions usually divert investment away from gold and into assets that benefit from a higher yield environment. Unquote. Now, the immediate outlook for silver prices is similar in that it remains bearish short term, influenced by an economic slowdown as GDP figures were lower than anticipated, and because of persistent inflation issues already mentioned. The appeal of silver as an inflation hedge could weaken. This scenario sets the stage for potential increases in market instability, and as we said last week, $30 has been a very tough nut to crack, and any approach to it has frequently resulted in quite significant pullbacks. With this in mind, and operating on the basis that geopolitical tensions do not worsen again, we see further consolidation in precious metal prices, which, to be fair, so far this year have had a good run. So gold, we envisage, will trade between $2,275 and $2,360, with $2,250 and $2,004 as outliers. We predict silver will trade between 26 and 28, with 25 and 28.50 as outliers. What do you think? Please share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you give this video a thumbs up, subscribe, press the bell sign, and we hope and trust you have a most profitable week ahead.